Good morning, traders. Happy Monday, and welcome back to the Trader Bacon Show. I am your host, Gates Adams, and I want to share something with you guys. It's a little bit bittersweet, but I am super, super excited. Let me let you guys know, today is the last episode of the Trader Bacon Show on Benzinga, but it is not the end of this broadcast. We will be moving to Apex Trader Funding's home YouTube channel, and we will be streaming it across various platforms. So you're going to want to keep an eye out for information on that. And the show will be renamed The Forge Trader Live at Apex, or at least something along those lines. I want to send out a heartfelt thank you to everybody at Benzinga. 2.5 years we've been doing this show here on Benzinga, 120-ish episodes. And it has been such a pleasure and such a privilege for me. So I just want to thank everybody at Benzinga who's been a part of this. I can't even begin to share how emotional this has been for me and how much of like I said, an absolute pleasure it's been for me. So we will not be doing a show next week because it's Martin Luther King Day. So look for the Forge Trader Live on Apex in 2 weeks. And we will get more details out on that here in short order. So just make sure you're either following me, following Apex, one way or another, and get information on that. Also, of course, as usual, we will be giving away 3 evaluations over the course of this show to the live viewership. So make sure to fill out the form in the chat. And we want to, of course, congratulate last week's winners, Marty, Kim, and Robert. Congratulations to you guys. You should have all the details in your email. Hopefully you guys are turning those into PAs and profitability here in short order. We will be announcing the winners from this week's episode in 2 weeks on the Apex channel. So make sure to keep an eye out for that. And of course, I want to make sure that you guys are aware, 3.5 days left on the 80% off. We also have the discount on the lifetime activations, 65 for the smaller accounts, 25, 50, and 100, 125 for the big daddies, 150, 250, and 300. So make sure to take full advantage of that. Just a few days left on that. Stock up. Now's the time. We just finished 90. If you didn't take advantage of that, at least we still have 80% off. So enjoy that while it lasts for a couple more days. Make sure to use promo code Benzinga to get that lowest price on those evaluations. Now, we've got a fun and phenomenal show. We're going to wrap things up on a high note. Brandon, my guest today, is not only a guy that trades similarly to me when I'm actually behaving. I have to throw in that caveat, especially today. But also has been trained by one of the guys that's been on the show a couple of times, Amish of APJ Capital. So shout out to you guys over there as well. And thank you. We're going to have more of a different perspective on some similar ideas, as well as expanding a little bit on that today. So let's welcome on today's episode, Brandon, on this final episode of the Trader Bacon Show. Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now. Brandon, what's going on, my man? I have to apologize to everybody in advance. I have this 65-pound puppy that wants to get in my lap right now as I'm doing the show. Hopefully, we won't have any issues with that, but she's excited, and she sees me busy, so this is the time to chime in. Brandon, welcome, brother. How you doing?
That's a big puppy.
Yeah.
Good. How are you doing, Gates?
I'm doing well, man. Thank you. Hey, great to have you on the show. When we first had the opportunity to chat, I really didn't know how many connections that we had, and it turns out we've got several, which has just been such a fun thing to experience. But man, thanks for coming on the show and sharing some of your insights with us. I know that there's going to be some similarities to some stuff that we've talked about before, but I know we're going to get Brandon's take, not Amisha's take, or whatever the case may be. So I'm looking forward to seeing some of the distinction and seeing how that has been playing out for you and building your success as a funded trader with Apex. So so let's talk a little bit about let's get into some history here. How did you get into the world of trading in the first place?
Yeah, actually, I wanted to trade from a young age, and after college, I had the opportunity to meet this very famous trader named Trader Vic from the 80s, and he told me not to do it. He told me it was it was over. that it was like not a game that you'd want to be playing anymore. And he totally discouraged me. He told me to go into real estate. And but which by the way, I did.
Yeah.
But looking back on it, I think there were a lot of things that Trader Vic probably placed his trades based upon on Wall Street other than just charts. And he was probably giving me advice from the heart, but outdated. And since the advent of the internet and trading came up, I got back into it because of seeing people on Instagram. I got to be honest.
Right.
And I ran across this guy's charismatic fellow named Jake Ricci, who runs a Discord called Rake Trades. And so I took his mastermind and I started trading options, which I would not recommend for beginners.
Options is a different beast for sure.
I lost about $20,000 in a few months. Always thinking that, oh yeah, it's gonna click soon. I wasn't even close. I was not even close. And putting that kind of money on the line, learning got tiring, and that's when I think like a lot of people ran across futures. But the man I really learned a lot, most of my trading from was the same guy that was Jake's mentor, named Al Brooks, Dr. Al Brooks. He's an old man at this point, but he reads price action bar by bar. I actually don't trade APJ's ICT style.
All right.
We just happened to be friends a long time ago, and we found out we were both trading futures with Apex just randomly. But I learned from Al Brooks, and then one of his best students took Al's swing trading concepts and applied them to scalping, named Ali Moin Afshari. And so I've been studying with them for 3 years. The first year I was on my own learning, and so those have been my main influences. But I have to focus on limit order, scalping, and also I'm going to show you a lot about how I use measured moves, which I don't find talked about very often.
It's certainly not a topic we've hit too many times on the show. After 120 episodes, that's not a very common topic. I'd agree with you on that.
I think you'll be interested to see how they hit when I show you.
Beautiful, man. Well, this journey, so you've been at this for a while, at least exposed to it for quite a while. What was...
Oh yeah, so I'll tell you about when I started. When I started with Apex, I made the same mistakes as a lot of people and did the 20 account times $200 a day math in my head before I was ready.
Right.
You can go through 100 evaluations pretty quickly buying 20 at a time. And the first two, I would say the first, I accidentally got one payout at the beginning. But other than that, I went 2 years. First I couldn't pass evals. The first year I couldn't pass evals. I would pass them, but I was passing them the wrong way. The second year I could pass evals, but I would get to that point where I was close to a payout, and the nerves, I would tighten up and change what I was doing. And it almost felt uncontrollable, the emotions you go through. And I mean, it's interesting, this journey, because I've made a lot of money in business at various points in my life, but there's been nothing more challenging than learning to manage myself. Is a lot harder to manage than other people.
I would wholeheartedly agree with that. And I think that we hold ourselves accountable to other people way more than we hold ourselves accountable to ourselves. So when we make these commitments, it's just part of the trader format, man. We will go through the process of saying, hey, I'm not going to do this and do it. I'm not going to do this and do it. If we just told somebody else, we'd be more likely to resist. I mean, I think at one point I was actually trading for a friend of mine a long time ago, weird situation, but I was given a set of rules and I followed them without exception because I was accountable to somebody else. And so that is definitely part of the dynamic that traders have to go through. For you, what was the biggest thing that you were able to do to start to overcome that emotional override when you have a rule set in place and you're not following it?
Well, the main really making the mistake so many times that you get sick of it is one way to get over something.
Okay.
I'll tell you the truth. After 2 years, I just thought I was one of the 99% that don't make it, and I stopped trading for 9 months. And
Yep.
it just seemed that no matter how much I learned and how much I resolved to do better, it wasn't happening for me. And I didn't really have anybody around me having success. This is one of the things I think that's important. When I found out that APJ was trading, and he came to me and asked me to help him in the mornings, watch him and be his risk manager and make sure that he was following his rules. I wasn't trading at the time.
Right.
And I said, sure. So in the process of seeing him have success and remembering the things that I did like about trading and how fun it was to learn, I decided to give it another shot. And I came back with fresh eyes. I mean, number one, I saw that it was possible. My friend was doing it. I mean, he was doing it, making good money. And I had some time off to get away from the roller coaster. I know nobody wants to take any time off. I'm not saying you should. I'm just saying that for some reason, when I came back after that time off, I was able to not be so wrapped up in the outcomes because I hadn't been doing it. And so whatever happened. I was just going along for the ride and trying to not worrying about what was going to happen. Because one of the main things that I had a problem with in the past, and I know everybody else does, is being wrong and trying to fix your trades when you're wrong instead of getting out of them. I was notorious for that. So the main thing you have to learn to do is take a loss. It takes a long time, but once you learn to take a loss and move on instead of digging a hole, then your winners matter a lot more because you're not canceling them out with big losses. The main difference between a break-even trader or a losing trader and a winning trader is they don't take the big losses. They still take losses. They take losses all the time.
Yeah, we all do.
But they don't take the big losses.
Yeah.
That's what you should strive to work towards.
And that's great advice. It's one of those things. It's we all know this logically. It's certainly hard to follow through on. And of course, this is part of that trader journey. It just takes time. It takes experience. It takes exposure. It takes working on and developing the self beyond just getting better at your strategy. And I think that's a big part where traders focus on one thing when there's really the bigger picture. That's it's going to get the bigger outcomes. So. Well, let's talk a little bit about strategy. I'm sorry, I was a little mistaken on what it is that you're doing. But let's talk a little bit about what you've got going on, how you build your day and how you execute your trades that's brought you this level of success. So let's go ahead and pull up the charts and see what we've got going on here.
Okay, well, first thing, I mean, I trade micros, and I find that I'm going to show you some charts from ES today, but just because it's a little bit, they were a little bit cleaner, but I trade micros on NASDAQ. I find that it gives me the flexibility. There's a wide range of average bar sizes depending on the day and the time of day. At the open on NASDAQ, you can have 80-point bars. I trade the 5-minute chart.
Right.
So I need to be able to hold through a 1-bar pullback in a trade. And if I'm trading a mini and the bars are 80 points, 80 times 20 is $1,600. I can't hold through that pullback.
No.
I mean, you're going to blow your account. It just, the position sizing doesn't make sense for the way I trade. So I also find that I like the flexibility to be able to enter at different points. I can take a more aggressive, I could, for instance, buy the close of a strong bar, and then if it pulls back, add more lower without fear of getting of my size becoming too large. It also gives you a chance, I'll show you later, to take profit at different points. But one of the other, so first of all, I trade micro. Second of all, I pay a lot of attention to the regular trading hour charts. After about the first 6 bars of the day, I don't really look at the Globex anymore.
Okay.
Because and I mark out my my chart before the day starts on the regular trading hours, because when you get this open, so this is the day before, when you get this open here and you see these 2 strong bars, you might think the day is going to be, it's going straight up. And if you're just on the Globex chart, you're not even going to see these, because there's a billion 5-minute bars going back overnight. And the market does remember a lot of the time what happened during the regular trading hours, and it reacts to it on the open. So if you're, you might not recognize why the market stopped right here, but when you look at the chart from yesterday, New York session, it makes a lot of sense. So that's one thing. I do understand the importance of the when I say Globex, I mean extended hours overnight.
Right.
But also the regular trading hours do have a big impact on what the open does. And I'll show you. So this was a bullish end of the day yesterday. And what happened was these at the end of the day, well, so we had this range here, and they started to get some reversal here, and they were expecting this to come back down and form a range down here. But instead what happened is we got a breakout, and it never came back down. So these guys expecting a pull back down here all got stuck.
Sure.
So when we open and we push up the third time and you expect a correction down, again, when you go back to yesterday and you see where these guys got stuck expecting us to form a range, you can see they all got out. They bought back their short positions and the market bounced back up. If you're not looking at yesterday, a lot of people will say, oh, that was a flash bar, or that was manipulation, or that was and the market usually has a reason. So if you're short here and you see these guys got stuck all afternoon trying to get out and they get a chance, you should take your profit on. If you're short, you should be taking profit here. Now, again, we get to high of day and it looks like we're going to go up all day. Well, but guess what? Here's another wedge from yesterday, going back to yesterday afternoon. So why did the market stop there? It stopped there because of that, because of yesterday's afternoon action. All right. I just think that's important to note, that what happened the day before matters a lot.
Well, and that is important. I think so many people want to see. Yeah, I think people want to see the immediate candles, and context is so important. But everybody has a different take on what constitutes context. So this obviously is where you're finding that read. And one of the things that I found is that you and I could have a completely different concept of where that context comes from. We could both be right, just in different ways. So I love seeing this, this all makes a lot of sense. I've never looked at regular trading hours. I always look at extended trading hours. And I'm finding this fascinating because I've never looked at it this way, because that mess in between absolutely messes with the dynamics. Anyway, go ahead.
Yeah. Okay. So to finish this one up, we, because I'm going to get into the next chart where I show you measured moves. But so we do finally get a breakout down, right? We get this breakout down. Here we break below the range, and here we get follow through, okay? So as soon as that happens, this whole range, now becomes a candidate for a measured move down.
Okay.
Once we get these breakouts, okay? And you can, as you can see, if I take this whole range and what I start to look at is, where could this be going once we break out? You can see we went a measured move down after this range broke out, but when did we do it? The next trading day. Right. So you got yesterday, you have today, and then you have a move from yesterday finishing in the morning of the day after. I just think that's interesting, and I'm going to show you what I mean more by measured move here next real quick, okay?
Okay.
We're going to go to here.
There we go.
So this day is a trading range day. Let me make this bigger for you. We're going up and down and up and down and up and down. I want to show you sort of a way to get targets when you don't know where or how far up we're going to go. For instance, is it safe to buy here? Do you know if we're going to go higher or not? Is it safe to buy this? And one of the ways I do that is when you see a bar that traders are going to have to take big risk to buy, like this bar here. It's going to. Oh, I'm sorry. I need to be on ES here. One moment. $17. Yeah. This works with NQ just as well, but ES is a little more precise. You see where the measured move of this bar ends? Exactly where the traders took profit up here. So when we get a breakout of a range, you can look at the size of the risk from the bar that if the traders buy it, they have to take this much risk. They're going to want 1 unit of risk as a reward for that. So I don't take a trade based on this bar, but once we start to go up, I will use it as a gauge to be able to tell, is there room for me left in this trade? By the same vein, once we break out, here. We break down here, and then we get a 2-bar reversal, right? You see where they took profit here?
Right.
Once you get, and it takes some time to learn which, you can usually do it on one large bar, or if you get 2 strong bars in a row that represent what would be one strong bar, you can use that too. We go back up here, we get 3 strong bars, and we get closed below the moving average. They're going to have to take the risk up to here. You can see where they take profit here.
So is this something you're seeing in trending and in consolidation?
Yes.
Conceptually speaking?
Yeah, okay. I can show it to you. And same here, at the end of the day, we get a reversal bar. For them to take that risk to stop there.
You got to go right there.
You go right there. And you can see they took profit here and we pulled back.
Okay.
So it's a tool. It's also a great tool that I'll show you for.
And John makes a good point. Yeah, no matter what the time frame, the same patterns will always exist. I mean, we've heard this in multiple arenas that, you know, these are all any concept works on any time frame. The shorter the time frame, the more noise and wicks you tend to get. But ultimately, depending on what you're trading, you're going to see the same type of price action, whatever the time frame is. Anyway, go ahead.
This is one that a type of day that a lot of traders have a big they have a lot of trouble with. They see this and they're scared. When there's 2 very important pieces to price to the strength of a move. One of them is the distance that the price has moved. The other is the time control. And so when you start to get bars going up and up and up for hours and hours and hours, what you have to realize is that there were people that tried to sell the top of this range again, looking for it to come back down. And they've been trapped for so long that every time they get any chance to get out of their position, they're exiting. They're exiting shorts and buying again. It creates this small pullback trend. But one of the problems people have is like, how far is it going to go? How do I know if it's okay to keep buying? And once again, you think about it. Okay, somebody's buying the breakout of this range. They're going to put their stop down here. The market will want 1 unit of risk as return, and you can see at the end of the day, it reached one unit of risk. So, and again, I don't take a trade on this breakout looking for this, but once it starts to move up, I'm saying to myself, where could it be going? And that's when I start to look for these. They're all 1R targets. But they're based
they're
on
1R targets for somebody who entered based on that criteria. Are you looking for an entry with a shorter risk based on current price action so that you can get a higher reward?
On a day like that, when you get these small pullback trends, all you need to do is wait for the bears to get anything, and you fade the bar. You fade the bar. And I would be fading here, looking, and I'd probably be exiting again at the high, or you know, it's some sort of like channel line.
Right. So keeping an eye for where it could be ultimately going short term. Yeah.
You can see here, you could have faded every single one, and you don't have to be scared of a big giant crash happening, because I mean, anything can happen.
Sure, of
But
course.
say we do get a big bar that comes down, uh, that comes all the way down here. Well, that's another reason why I like micros. There's a very high chance that bar I would add more down here, and that bar is going to bounce back up, and it'd be fine.
Mm-hmm. Yeah.
You just don't get this kind of time control for hours and hours and hours, and then a crash all the way down to the bottom. It doesn't.
Right.
Now, the days you want to be.
One of the things, I think that's one of the things that makes a strategy make sense for somebody. When you can understand the why it wouldn't happen, it gives you confidence to trade it actively with understanding the risk, but that's not where the probability is.
Right. Yeah.
Now, Brandon, I'm loving this because this is a concept that I've not really spent a whole lot of time on, and I would absolutely love to continue down this road. But we're already a minute over, and I want to, of course, be respectful to Benzinga and the staff and everything like that. I just want to talk to you real quick, and let's real nutshell here. I mean, you've been doing this for a while now, and you finally started to get some consistency and a level of success. What is it like for you now on the other side, where you're starting to see that the fruit of all of this labor, all of the work that you've been doing, all of the knowledge that you've been building up over the last however many years it's been at this point?
Well, the money's great. After 4 years of doing this, I was in the hole. And I made almost $50,000 in the last 3 months of this year. So, and it didn't come. I didn't just get one big payout. I was pretty consistently making $1,000 to $1,500 a day. It just the overwhelming sense of accomplishment,
Sure,
and the confidence, and recognizing that. Wow, you can become one of the 1 or 2% if you just don't quit and you make the commitment to yourself. It is possible. It is possible, and just that sense of accomplishment and being one of the people that didn't quit is worth so much to me. As an individual, I'm really appreciative of trading and everybody here around in this community.
I think that is an unbelievable final concept to share on the show, because that really is the concept of the show. If you don't give up, if you continue to work for it, it is out there. And the reason that it was 1% so long ago is because if you're using your own capital, there's only so many bullets in the chamber. Nowadays with Apex and the opportunity to spend $20-$30 on an evaluation, it really just changes the dynamic. You can do this for 10 years without going broke until you figure it out. Now, we hope it doesn't take 10 years, but the reality is that possibility is out there, because when we start to see it, numbers like $50,000 in the last 3 months are not foreign to us. We see this all the time and time again. In fact, I mean, I've had a rough patch since, but my last payout was in November, and it was a $40,000 payout. That was almost 2/3 of my my total gains for the year. And I should say that.
I think actually, the numbers are higher with prop. I think they are seeing higher than 1% chance. They're seeing mid-single digits with people. Much higher success rate. So I would highly recommend staying with Apex and doing prop.
And that's why I do this, because there was a time where I thought it was impossible for me to do it. I still tried, but I thought that it was truly impossible. And I managed to have a really killer year this past year. And 24 was a big old goose egg. So there is that point where things come together and that opportunity you start to really realize how crazy the opportunity is if you can get onto the other side of it. Brandon, I want to thank you so much for your time. I really appreciate you sharing some of your insights. I know you and I are probably going to have an opportunity to chat some more, because I definitely want some more insight on the measured moves. And we'll see about maybe if you're interested coming onto the podcast and sharing some more insights over there as well. I've got to get some things done so that I can get that back on track, but would definitely like to explore that a little bit deeper for myself and for the audience. One last heartfelt thank you to Benzinga. Thank you guys so much for everything that you've done to make this show possible. I truly am grateful for everything that you guys have done. Don't forget, no show next week. In 2 weeks, we will be on the Apex Trader Funding YouTube channel as well as the socials. So make sure to like, follow, subscribe, get that set up beforehand, and make sure to follow me. I, of course, will be announcing all of the show information. And last couple of days for 80% off. So apextraderfunding.com. Use promo code Benzinga, 80% off, discounts on lifetime activations. Go get it. Thank you all. And please follow us over to Apex, the Apex channel. And I will see you guys in 2 weeks on, well, what will ultimately be the Forge Trader live on Apex. We'll see you guys there. Thanks for joining the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Make sure to join us next time, Mondays at 11 a.m. Eastern.